Hey guys, welcome back. Cinemark released their Q3 2024 results on October 31st, and I think it is safe to say that by the end of 2025, Cinemark is once again going to be a stock trading over $40, again completely obliterating the negativity put out by short sellers and people that are pulling against this industry. Spend a minute with me. We're going to look at the dashboard for Cinemark, talk about some of the highlights from their earnings and what conclusions we might be able to draw from that about what is likely to be released from AMC on Wednesday, November 6th. While industry experts are telling us that the real recovery in the box office is coming in 2025 or 2026, we can already see from Cinemark's results that the recovery is well in progress. Cinemark generating $922 million record high third quarter revenue here in the quarter that ended October 2024, surpassing last year's third quarter revenue by 5% and the 2019 third quarter revenue by 12%. In terms of net income, Cinemark reported $189 million of net income and a record third quarter. It is worth pointing out though that included in that $189 million of net income is a $42.7 million tax benefit. That tax benefit won't be an ongoing thing. That is just a partial release of valuation allowances from the balance sheet, and they transfer over to the income statement for this quarter. Without getting into the weeds on CPA talk explaining this, when a company's financial outlook looks like it is improving, then they can release these valuation allowances or contra asset accounts on the balance sheet, which look like on the income statement a temporary reduction in income tax for that quarter. For Cinemark, that was a income tax benefit or a negative income tax of $42.7 million in Q3. Attendance for Cinemark was slightly down for the quarter from 61.9 million patrons to 60.4 million patrons, although as you can see, due to an increase in the average ticket price and the average concession revenue per patron, they were still able to achieve that 5% increase on their revenue. Cinemark ended the quarter with $928 million of cash on their balance sheet, although as their CFO Melissa Thomas pointed out, they intend to leverage that cash on the balance sheet to pay off some of their convertible debt or all of it that is due in August 2025. They have $460 million of convertible notes coming due in about 1 year. On the cash flow side, the company generated $107 million of cash from operating activities, $64 million of free cash flow, and they spent $43 million on CapEx for this quarter, on their way to their target spend for CapEx for the fiscal year of $150 million. Looking at the dashboard for Cinemark, which is kind of my red, yellow, green visualization for you about the risk of investing in Cinemark, there are a couple of different things to talk about on here. Yes, the company is profitable. They have improving earnings per share momentum. They have a healthy and positive return on equity. Cash position is good. The debt to equity ratio for Cinemark is 6.13, and they have a net leverage ratio of 2.8x, which they say is within their targets and actually surpassing their expectations. Cinemark's current ratio on the dashboard slipped under 1.0, which threw it into the red. That is due to those convertible bonds now being due in less than 12 months. They slipped over into the current liabilities, and I imagine that in the next couple quarters this will get back into the green as they continue to stack cash on their balance sheet. Down in the bottom left box, you'll notice that the trailing 12 months revenue growth rate is negative 5% due to the actors and writers strike in Q1 and Q2. I went ahead and called an audible here and colored it green because we know what is going to happen with the box office and with revenues in the coming 12 months. And this number is going to change to a positive number in short order. Dilution risk, I have it marked as yellow. I'm not certain if they're going to pay off those convertible bonds in cash or if the lenders are going to convert. From what the CFO is telling us, it looks like they're going to try and pay them off in cash. We will just have to keep our eye on that. Short interest is high on Cinemark. I think that that also has to do with some hedging from the lenders in relation to those convertible bonds. I guess that it is additionally possible that the short interest could be related to that potential dilution risk. I'm not really sure, but it doesn't seem like a great short to me. I think that over the next 12 months, we are going to see many of these yellow and red boxes on Cinemark all turn green, just like we see on IMAX. Subsequent to Cinemark's Q3 results and bolstering our thesis that this industry is far from dead, Cinemark got quite a few of analyst upgrades over the past few days, with price targets ranging between $32 and $36 over the next 12 months. It would not surprise me as we move into 2025 to see the analysts push these price targets up over $40 by the end of 2025. If you want to know where these price targets are coming from, it is very easy work, guys. All you need to do is look at expectations for annual earnings per share and then apply a industry normal PE ratio, a forward PE ratio of between 20 and 25. And if we take the expected EPS for Cinemark in 2025 of $1.91 and apply a PE ratio forward of 21, that gives me a price target of over $40 coming up for Cinemark. Calculating a back of the envelope price target for a company is really this simple. Just take analyst expectations for earnings from the company and apply a PE ratio that is normal for the industry. I see a lot of crazy stuff out there, like the GameStop social media folks looking at the balance sheet and trying to calculate a price for GameStop based off of price to book ratio. I see people talking about price to sales ratios for AMC. I think that these sort of analysis are going to lead you into a trap, and it is best to stick to something simple like a forward PE ratio. And if you want to go to a next level, a deeper analysis, look at something like EV to EBITDA, and maybe I will cover how to do that EV to EBITDA evaluation for you guys on a upcoming video. I want to close today's video with some thoughts from the CEO of Cinemark, Sean Gamble, that he said on the analyst call, what to expect as we finish up this year and look into 2025. Sean Gamble says, we are highly optimistic about a strong close to 2024 with fourth quarter releases like Wicked, Gladiator 2, Moana 2, Mufasa, and Sonic the Hedgehog 3 on the horizon, as well as the continued momentum they will carry into what is shaping up to be a blockbuster 2025 film slate. Remember, guys, if you are listening to people who are negative on this industry, do your own work. Listen to all of these CEOs and look at what industry experts are telling you for the 2025 and 2026 film slate. And then once you've done your own work, you can make your own decision about if the people you are listening to with the negative attitudes might have some sort of other motivation. A lot of these people, frankly, on social media that are pushing all this negative sentiment, listen to short sellers, or they are just emotional traders that have never once tried to understand the financials of any company in this industry. What I can tell you from listening to all of these CEOs is that the negative social media accounts are not listening to the CEOs. Let me know down in the comments below what you think of Cinemark's Q3 results and what are you expecting for AMC. We find out in just 2 days, guys. Wednesday, November 6th, after the market closes, I will be hosting that earnings call live here on the channel. I hope to see you there. Thank you for watching all the way through. I am Tony Denaro, and I will see ya on the next video.